Welcome to Consortia Accounting Business Advisors How to Build a High Performance Accounting Business. This is session 6, Increasing Cash Flow. By way of introduction, this session presents how you increase operating cash flow. Now, once again, I always like to remind us of the primary business processes: management, R&D, marketing, sales, production, finance, and customer service. Customer service we'll talk about in our next session. We've talked about the first four previously, and of course today we're going to talk about finance. And again, the primary business process workflow flows as follows. Every business begins with what products and services they're going to offer, developed through our research and development. We're going to market those products and services. We're going to sell those products and services. We'll produce them. And then, of course, once we have performed the sale or the service, we'd like to get paid for it. And of course, that's the main role of finance. And then, of course, we want to make sure we perform customer service, keep our clients happy, to be able to make sure that they come back and that they are able to tell their friends about us, and of course, processing other services and products to them. So, as far as primary business process results, again, I like to remind you the number 6, finance. The whole idea is to obviously look for ways to increase our cash flow. And again, as far as the top 7 small business problems which relate to the primary business processes, we're talking about number 6, cash flow. I would say that if it's not number 1, it's pretty close to it. I'd say number 1 and 2 are perhaps getting customers and getting cash. And so that's why this is such an important subject to address. Now, just to remind you, you all know this, and that is that we have a statement called the Statement of Cash Flows. There's only 3 ways to get cash into a business. One is through operations, so cash flows from operating activities, from investing, cash flow from investing activities, and from financing, cash flow from financing activities. Now, of course, today we're not going to talk about investment. We're not going to talk about financing because a vast majority of your cash flow should, from a healthy, high performance business, be coming from operations. In fact, a really good business, quite frankly, does do investing with their surplus cash, but may or may not do financing. But nonetheless, we'll talk about operating cash flow. Now, let's begin by talking about best practice sales and receipts. So in this session, we're going to present best practice sales and receipts process. The objective is to increase operating cash flow, as we've stated. So as far as sales and receipts, they're the critical activities. Now, by the way, this is from a CPA firm mindset. For the next few slides, we're going to talk about, because we deal with a lot of CPA firms, we deal with a lot of accounting firms, not all, but many. And so this is the mindset. And for those of you who are bookkeeping organizations, payroll organizations, accounting organizations that may not have gone through a CPA firm structure, I want to give you some mindset as far as how they think and why they do what they do. So as far as sales and receipts, they're critical activities of accounting companies. Not only must you follow practices that increase operating cash flow and protect the company's cash from misuse, but you must process it accurately and effectively to manage the company's operating cash flow and maintain good client relations. So this is the critical thing here that CPA firms are concerned about. Obviously, having good operating cash flow, but at the same time, maintaining good client relations. And so that should apply to any business. The idea is that any business should want to have good operating cash flow, and they should also make sure that the sales and receipts processes and strategies that they follow do those 2 things: increase operating cash flow, but they maintain good client relations. In other words, we don't want to implement a strategy, a cash flow strategy that's going to tick off some of our clients or customers. And so anyway, keep that in mind. As far as types of sales transactions, you may have heard this before, but as a reminder, there are 3 types of sales transactions. Number 1 are advance payment sales. Number 2 is cash sales. And number 3 is credit sales. The difference between these sales transactions is in the timing of when payment is received. Now, let's talk about these. So, as far as sales transactions, so number 1, advance payment. So, as far as timing, customers pay before the product or service is shipped, delivered, or performed. 2, cash sales. Payment is received at the time the product or service is purchased, shipped, delivered, or performed. And 3, sales on account, or what's also referred to as credit sales. Customers are provided a period to pay after the product or service is purchased, shipped, delivered, or performed. Now, by the way, credit sales became very popular back in the 50s. Companies, especially like department stores like Macy's and others, they saw this as an opportunity to increase sales. Now, that was back when a person's word was their word. If you're going to carry an account, they're going to pay you. We live in a world now where you just can't count on people. And so, in other words, as we go on, it's like less and less people pay their sales on account. Nonetheless, the way it used to be definitely it helped improve sales. And knowing that a vast majority of those people who did advance sales would pay. That's a little bit different today. So we kind of avoid that, but nonetheless, many people still do carry sales on account or credit sales. So as far as operating cash flow golden rule, this is the absolute no nonsense golden rule when it comes to cash flow. That is operating cash flow. Receive payment as soon as possible. So when you sit down and think about your products or your services, think about making sure that in your process, as far as payment processes, make sure you obey this rule. Receive payment as soon as possible. So obviously that means an advance payment sales comply best with receive payment as soon as possible rule because you're prepaid. So you can't do much better than that. As far as cash sales don't comply with the receive payment as soon as possible rule as well as advance payment sales, but it's the next best option. And it's generally accepted for customers to pay for a product or service at the time of purchase, shipping, delivery, or completion. Think of Amazon, for example. Now, sales on account or credit sales. Sales on account sales don't comply with the receive payment as soon as possible rule. It's the worst one, okay? And typically at the very worst or the very least of the worst, you may say payment due within 30 days. Other organizations may do longer. Now the question is, in reality today, those who have credit sales, are they paid within 30 days? I would say most are not, or I should say many are not. And again, it gets worse as time goes on. And so, again, this is becoming less and less likely. But again, just think about the golden rule. Get paid as soon as you can. And so this is the least. And so you want to avoid sales on accounts, not only because credit sales payments get worse every year, but because it just does not obey the golden rule of cash management. So again, I want to introduce you to a few things that accounting firms do. They're a little bit unique. And so as I do so, I want you to help you understand their background as far as why they do this. And then of course, we'll talk about the way we would suggest. So billing and collecting represent the culmination of an accounting firm's work. That's the way they look at it. It's an integral component of an engagement rather than a byproduct. It requires planning, due professional care, and periodic review. A properly managed billing and collection process increases the firm's operating cash flow. So they put a lot of time and effort into it. Now I'm going to build an analogy here that you can relate to, especially for those of you who have worked for accounting firms. Accounting firms in general, what they do is they say, okay, we're going to bill on the fourth Friday of the month. In other words, they literally set aside one day. Now, that's not to say they're not collecting the time and everything along the way. That's the information they use to bill. but they literally have, and law firms too, many professional firms are like this. They have a specific day, and typically, for example, the fourth Friday of the month, that fourth Friday they'll sit down and they'll spend the entire day and sometimes evening billing their clients. Okay. Now, valuing the accounting professional. So this again is the way they look at it. And again, not just CPA firms, but professionals in general. The billing method of an accounting firm is a means of valuing the professional experience, training, and time of the firm's personnel. Accounting firms use a variety of billing methods, and some are more sophisticated than others. Billing is more of an art than a science, and no one method is appropriate for all firms or for all engagements. But overall, you'll find that a firm pretty much has a one standard way of the way they bill. Now, as far as accounting firm billing methods, so typically they use one of two. One is called a time-based fee based on their time. The other one is called a fixed fee. Larger CPA firms, even local firms, most oftentimes use time-based fee. In other words, every professional in the office has a billing rate. And again, attorneys would be the exact same thing. So basically, when they spend their time on you, they're going to bill you by the hour. In fact, they're going to bill you down to the 10th of an hour. On the other hand, fixed fees is becoming more popular. So some local firms may have sometimes some type of services where they do have fixed fees. But overall, they're still, for the most part, time-based fees. Now, as far as the advantages of time-based fees, number one, it's generally accepted, not only among the profession, the CPA profession, but also among CPA clients. That's pretty much what they anticipate. Number two, they're considered more fair and impartial. And number three, they give the firms protection from uncertainty. So let's talk about those for a moment. So as far as generally accepted, most accounting firms bill their clients using time-based billing. Each professional employee has a standard hourly rate, and the time spent on an engagement is charged to the client at that hourly rate. So, for example, again, as we've talked about, in a normal, good size local firm, you'll have the partners who get the work, you'll have the managers who oversee the work, and then you'll have the staff, the professional staff that do the work. And they all have different billing rates. The very least of the professional staff, what we would call a junior professional, has the lowest billing rate because, again, based on their experience. And so, of course, the partners are going to have the highest billing rate. But as far as billing, it usually has very little to do with billing because, for the most part, most of the work is being done by the managers and the staff. And so the idea then is that the staff that work on an engagement, they obviously follow their time and charge their time at their rate, the number of hours or tenth of an hours they spend on an engagement. And management does the same. So when the partner sits down on that fourth Friday, they look at the time that each person spent. They pretty much add it up. The system that they use pretty much does that for them, and that's pretty much the rate. Now, sometimes they'll take a look at that, and they may write it up, but most oftentimes they write it down. Very seldom times they may even write it off, okay? But that's where the judgment comes in because they talk about relationships with their clients. Gosh, I can't bill them that because, it's going to damage our relationship. So he or she will write it down. The standard hourly rate method involves assigning a billing rate to each professional employee, as we mentioned. Generally, the rate is computed using a multiple of the staff's members' hourly pay plus benefits. So what they're saying there is that this is the way it works. So if I just hired a new professional staff member, what am I going to pay them as far as salary? And then you also include any benefits, health insurance, 401k, cafeteria plan, whatever the case may be. So the idea is, in essence, what's my out of pocket for this person? Then what they'll do is they'll divide that by 2080. In other words, there's 52 weeks in a year, there's 40 hours in a week, and so that's 2080. So you divide that the total amount as far as salary and benefits divided by the 2,080, and you find that amount. And then you times it by a certain percentage. In general, as I've mentioned before, local firms like to use it 3 times. So if they say, we pay this person, just make it simple, $100 an hour, so we use it 3 times, we're going to bill them out at $300 an hour. And so what they're saying to you is $100 is for the employee's salary and benefits, $100 is for overhead, the office, equipment, etc., and $100 is profit. That's pretty much the way they look at it. Now, just for your information, larger firms, the national firms, have a 4-point or even a 4.5-point times what they pay their employees as far as salary and benefits. Okay, so that's what they're talking about here. So each professional working on engagement records their time, and their time is totaled and multiplied by the respective hourly rate to determine the client's fee. And that's what we were just talking about. Ideally, the assigned billing rates reflect each employee's level of experience and technical competency. So that's the way they look at it. They look at it and say, look, this is the expertise of this person, this is the experience of the person, this is their competency, and therefore we can justify billing them out at this rate. And again, that's why it's always lower on the new staff and higher on the experienced staff, because obviously it goes up. Considered fair and impartial. Accounting firms have used time-based billing because it's considered a fair and impartial way to value services rendered. In addition, most firms feel comfortable using time to price services because of the perception that what they are selling is their time. However, what is being sold is the employee's experience and technical competency, and not just their time. So, protection from uncertainty. Accounting firms have traditionally used time-based billing to address the uncertainty of the time involved in performing an engagement. So if you bring on a brand new client you've never worked with before, even though you may have done audits before or tax returns before or accounting before, you've never dealt with this particular client before. And so there are some uncertainties as far as are they going to provide information to you in a timely manner. Are there going to be some complexities that come up each month? You just don't know. So the time involved in performing an engagement is primarily due to complexity. Each individual or business client is unique, and the amount of time involved in performing a service for one client is most likely different than performing the same service for another. Thus, to protect themselves from deteriorating profits, accounting firms use time-based billing. If a firm can mitigate these uncertainties, fixed billing would be generally more accepted by accounting firms. So, time-based fees disadvantages. Number one, time and effort to process billable time. As I mentioned to you, the partners hate billing day. They just absolutely hate going in that day. They know it needs to be done, but it's a drudgery. And so that's part of it. So the time and effort to process the billing time, and then the employees work at different speeds. You may hire 5 people from a prestigious university, come out with the same grade, so on and so forth. But when you get them in the office, you begin to train them to perform accounting services, they're all a little bit different, okay? Nobody is exactly the same. Some do work quicker than others. So time and effort to process billable time. The main disadvantage of time-based billing is the time and effort necessary to accurately input, accumulate, and process billable time. And again, that's why partners hate it. Employees work at different speeds. Professional employees with the same billing rate often work at completely different speeds. Clients can pay for the inefficiencies of a professional employee and may perceive they assume all the risk for increased hours, including inefficiencies, on an engagement, resulting in potential collection problems later. So let's say, for example, you had, Bill doing somebody's accounting on a monthly basis. They leave the firm, so we have one of our juniors come up to senior, and because they're different, he or she may be faster and they may be slower. But if they see the rate going up, then obviously they're going to blame it on efficiency and think they shouldn't be paying for it. And they may have a point. Okay. So again, those are the two disadvantages. As far as fixed fee advantages, so shifting gears here. Number one, you can accurately forecast revenue for the coming year, which is difficult, the time-based fee billing rate. Two, clients prefer a fixed fee. If you're performing the same service each year, each quarter, each month, then you would typically think, if you're a client, that it should pretty much be the same amount each year, or each month or each quarter. But obviously, it may or may not be. And so that's why they prefer a fixed fee, because they know exactly what it's going to be each month or each quarter or each year. Three, billing process is streamlined. In other words, it's automated. And that's what we're going to talk about here. We're going to talk about best practices, but I want you to see pretty much the way it is, the pretty much the standard within the accounting profession as far as how things are done. Accurately forecast revenue. With a fixed fee, the firm can accurately forecast income from each client. By knowing how many clients your firm has and the billing structure they're on, it's easy to project the revenue for the coming year. Clients prefer a fixed fee. Clients prefer a fixed fee. They prefer to know what their fee will be each month instead of varying fees for the same monthly service, as we've talked about. Billing process is streamlined. When you obtain a new client and know their monthly fee, you set up the client on a fixed monthly recurring sales receipt. Now, by the way, we're going to talk about how we do that. Again, we're just going to give you some best practice for things to consider, okay, in case that may be a way you might want to go. So what I'm going to do is, as you know, our sister company is called Consortia Small Business Accountants. Consortia Small Business Accountants product and service sales are advanced sales. So that's the first thing. We sat down and said, okay, and remember, we came from a CPA firm background, a local firm background. We were doing time-based billing. But as we've gone along, we've streamlined, we've learned, and so we've come up with what we believe to be better practices. And so we present those to you. And again, some things you may love and some things you may hate. And that's totally up to you. We're just trying to help you. Okay, that's the bottom line. All right. Now, if we can help you do it, great. And if not, that's fine. So, fixed fee disadvantage. The fixed fee has no allowance for complexity of some engagements. Complexity is primarily due to obtaining new clients from industries the firm has little or no experience in. And that's why we always recommend to you to specialize. And that doesn't just mean one industry, it could be two or three. The point is, you don't want to be the opposite. Every time somebody comes in, say, for example, you provide accounting services, somebody comes in and says, hey, will you do my accounting? It's hard for us to say no. But here's an example, I personally cannot stand manufacturing. It's too complex for me. It just blows my head. And so I hate working with manufacturing companies. And so when I was younger and I started, I was looking to feed the family. So if a manufacturing company had come to me, I'd have said, sure, I can do your accounting. And I would have regretted it, to be honest with you. Okay. So that's the reason why we talk about specializing in two or three fields, so that you get really, really good at it and you know it. And so there's no on-the-job learning. In other words, you eliminate complexity. If the firm obtains new clients from industry the firm has considerable experience, the complexity issue is primarily eliminated. If you serve clients your firm has little to no experience with, you deteriorate your profits with fixed fee billing. And again, another reason why we stress specialization. Now, Consortia Small Business Accountants products. So one of the things that we realize, and you heard the expression, making money in your sleep. So with accounting professionals, whether if you use time-based billing or fixed billing, whatever you use, the bottom line is, if you're not working, you're not earning. So if you want to earn, you better work. And so the point is that what we realized is that with products, you don't have to be working to earn. I wished you could see the numbers that come in from our e-commerce each morning, especially on Monday morning from over the weekend. We didn't do anything over the weekend, and yet we make thousands of dollars over the weekend. And we do so by offering these products. Okay. So that's the main reason why we offer products. First of all, it's in our wheelhouse, as you'll see. And second of all, yes, initially up front, it takes a little effort to put forth an accounting course, to build and develop a brand for certification, to write guidebooks, to prepare training, to offer experience, to offer licenses. Okay. Yes, it took some time up front. Okay. But once it's done, you don't have to do anything. Okay. Although one of the things we do is we keep things updated every year. For example, this course we do every year. And if you attended this course last year, you would notice that this course has been improved from last year. Okay. But anyway, the point is that we strongly recommend that you consider products. Now, products that may be in your wheelhouse, as I've already mentioned, education courses, certifications, guidebooks, training, experience, licenses. Now, where did we come up with this? So we come from, again, working with small businesses. And a vast majority of small businesses use QuickBooks. In the old days, desktop. Now, today, they use online. What's the problem when clients do their own bookkeeping with QuickBooks? The problem is the person who's doing it 9 times out of 10 doesn't know what the crap they're doing. Okay? They've never been educated, they've never been certified, they've never been trained, they never had good best practice experience, and they certainly don't possess a bookkeeping license. And so that's where we discovered this, because we were constantly being asked to support and to go out and train and to fix problems and so on and so forth. You've all most likely heard of a QuickBooks Pro Advisor. Well, today that's not as advantage. You don't have much of an advantage as you used to, because it used to be so many problems that if you were offering training services at a certain rate, support services, fixing services, setup services, you could do well. Okay. Whereas you notice that we don't offer any of that. Okay. But what we do is we teach people doing bookkeeping in-house to, we teach them educational courses on accounting, on bookkeeping, on payroll, on QuickBooks Online. And ours are literally college level higher education courses. They're literally the same courses you would take if you went to a college. Okay. And then we have our certifications. And so these are certifications that we have developed: bookkeeping certification, payroll certification, QuickBooks Online certification, others. We've written our own best practice guidebooks. If you go through a QuickBooks Online course, for example, they're going to teach you how to do an invoice. They're going to teach you how to pay a bill, that kind of a thing. But they don't teach you the accounting and the bookkeeping behind the features. And so what we did, we sat down and wrote literally, how do we perform bookkeeping? How do we perform payroll? How do we perform accounting? How do we do business performance analysis? And so we did that literally years ago, and every year we update it, of course. And so we have guidebooks, and we have training on our guidebooks. And then you'll notice that if you looked at our website, for example, both on Consortia Accounting Business Advisors and Consortia Small Business Accountants, again our sister company, you would both notice that they have a school on there. In the state of Utah, we are literally a certified Utah post-secondary school. And so we literally, that's the reason why we offer college level courses, certifications, guidebooks, training, etc. The guidebooks and training were more designed for our clients where they had their own bookkeeper using QuickBooks, but again, they had no bookkeeping background. So that was what our guidebooks and training were for, because our guidebooks just don't teach you, what you do on Monday, what you do on Tuesday, what you do on Wednesday, but we, as far as a bookkeeping perspective, but also once we tell you what you need to do on those days, we then show you in QuickBooks Online how it's done. And then as far as experience, again, we would review their work and we would support their work as far as that goes, and licenses. So, but today we find in the school that people will come out of nowhere wanting to learn bookkeeping and get a bookkeeping job. So they go through our courses, our certifications, our guidebooks, our training, our experience, and our certified public bookkeeper license. Okay. So all that came about over years, over 5 to 10 years. At first, it was just some training here and there. We kept adding to it. Whereas now it's full-fledged. Again, we're an actual school. And so we have people coming from the woodwork every day, wanting to take our courses, so on and so forth. And again, took a lot of time up front. Just for your information, for example, in education courses, we use McGraw-Hill education courses. We use what they call McGraw-Hill Connect. In other words, it's online courses. We don't write those. They give us all the materials, so it makes it easier. We support, so on and so forth. But everything else is pretty much what we have developed. Anyway, the point is about products is, like I say, you make money in your sleep. Okay, so we strongly recommend that. And I took a few minutes here because I know that very few of you carry products. And hopefully this sets off a light as far as earning money while you sleep. Okay. But of course, we're going to tie it into, as I'll do right now, the product sales and receipts process. So on our website, then, speaking of our products, all of our products, you would go to our e-commerce website. And notice I said e-commerce website. And they go to the product page, such as a course, and they select a course. They then select Buy Now button. They then enter their customer and payment information and select Pay. Boom, it's done. And of course, we receive the order, and then of course, we fill the order as far as that goes. And we have non-professional staff that, of course, does all that. All right, and then what I want to introduce you to is Consortia Small Business Accountant Services. Now, you may say to yourself, okay, I see number 7, bookkeeping. I see 8, payroll. I see 9, accounting. I get that. And I see 11, tax planning and preparation. I get that. But what's with all this other stuff? Well, again, we have always worked with small businesses. And when I stressed earlier in another session about research and development, this is the results of our research and development. We've asked ourselves, look, how are we going to become distinct and gain a competitive edge against our competition? In other words, how are we going to be different? If I were sitting down with a potential client that was talking to 3 accounting firms wanting us to do their accounting, the question is, what am I going to do so that they choose me over the others? And this is what we came up with, okay, over the years, and we keep adding more. So, and then the beauty of this, just for your information, from our client's perspective, is that this is an all-inclusive fee. And so they pay us a fixed fee each month. And so we will, if they have not incorporated, we will do their incorporation. If they don't have a business plan, which 9.9 times out of 10 they don't, we will do their business plan. If they ever need, while they're one of our clients, to get a business loan, we have a specialization not just in doing business loans, but doing SBA loans. And so we know what types of loans to look for and how to give them and what the people are looking for, so on and so forth. So we do business loan packaging. And then on top of that, we do digital marketing, website development, hosting and maintenance, and video production. And so you may ask yourself, why in the world do you do that? Because you'll notice our theme is that we help them become high-performance organizations. And yes, we can do that by doing their bookkeeping, payroll, accounting, and a business performance analysis. That's all accounting related. And yes, we could do it to a certain extent, but we can help them become a much higher performing business by offering these other services, especially digital marketing, website development, hosting and maintenance, and video production. It all started because we ourselves spent a lot of money doing that for us. And then we realized, it was all in-house. We realized, gosh, now that they pretty much are done with us, why don't we start using them to sell those services to our clients? So before, it was not part of all-inclusive. It was just, hey, you like us? We've done good work for you. If you need a website, come see us, kind of a thing. And as time's gone on, that department has grown. And so the idea is that we just do all-inclusive everything. Now, there's a lot more I could explain to you. You may think to yourself from a money standpoint, how do you make money, especially when you see the fixed fee? But believe me, we do. And there's a lot of things I could share with you, but that's not what this presentation's for. So let's just get back to this. So these are our services. And again, it's an all-inclusive package, okay, is the idea. And not only to mention that, but also we do the first 3 months for free. Why do we do that? Okay. Number one, because people are more willing to give us a chance. So if they're talking to 3 people, we offer this, not to mention the all-inclusive services, we're most likely going to pick them up. Okay. Now, we do it mainly for that reason, but the second reason is we may not want them as a client. And so if we pick them up as a client, we start getting paid for it, we kind of feel obligated to keep going on. Whereas we give them 3 months, at the end, if they have not been cooperative, they haven't gone to our portal and filled out the forms we asked them to give us the information we need to be able to do the work, so on and so forth. If they come across as being a little shady, I mean, if there's anything at all that raises red flags, then we won't work with them. And we'll say, thank you so much for giving us a try, but we think you'd probably be better off with those other 2 people. Okay. And so we think, and here's something that I learned a long time ago. It's called think long term. Don't think short term. Always think long term. And in my book, this is thinking long term. Okay. And again, if you really understood how this worked, you'd be quite impressed, actually. Okay. But again, we're talking today about cash flow. So the last thing I want to tell you is that this is, and again, you might want to go to our website, which is consortiasba.com. That's our sister company, Small Business Accounting Services. And so you may want to go click pricing and then click, and of course, go to the pricing page, and you'll see the 3 levels that we have: startup companies, emerging companies, and mature companies. And the fees are different. They double as you go up. But the point is that the starting rate is $500, $499. And that's what we charge them from day. Well, again, we give them the first 3 months for free, but once they're a client, that's what they'll pay until they become an emerging client. And the difference between startup, emerging, and mature is based on the number of transactions. Okay. We don't sit there and count every one of them. As you know, in QuickBooks, you can produce a report that tells you how many transactions. So it's just a matter of minutes, okay, as far as that goes. But anyway, what I wanted to share with you is this. So if you were to go to our website and you were to go down there, and I'm not telling you to click the buttons, but I mean, you go there, you go to pricing, you click, you see the 3 options we have, and you start, say you're a new company, and you start with the setup price of not $499, $500. Well, that becomes a deposit to us. From our standpoint, we haven't earned it, it's a deposit. But notice, it's an advanced sale, okay? Number 2, we will then perform their work. Now, once they pay that, we then, of course, send them the information to go to the client portal and begin to provide us the information needed for us to do their accounting, okay, or whatever it is they're wanting us to begin with. Now, obviously, we don't start from day one doing everything. Incorporation, planning, loan package, marketing, that's not the way it works. What we do is we focus on doing their bookkeeping, their payroll if they have payroll, and then we have, of course, focus on the accounting and business performance analysis. We do those things during those 3 months. One of the reasons why we do the business performance analysis, again, we're trying to analyze, do we want to keep working with this client? Number 2, when the 90 days are up, we want to be able to go with them and say, okay, not only have we done your bookkeeping, payroll, and accounting for 3 months, and hopefully the way you've experienced with us has been a heck of a lot better within our competition, which I guarantee it will be. So that's the first thing. The second thing is that we tell them, we don't sit back and hold back and say, okay, we're not going to give you these recommendations unless you become a client. We give them to them. And we tell them, look, these are some things you can do, to increase your performance. And one of those is what we're talking about today, increasing your cash flow. Okay. So focusing on advanced sales, for example. And so the point being made here is that that's what we'll do. And then what happens is that first payment then applies to the 4th month. And then, of course, it's a subscription, and so it's automated. Once they've gone in and set that up, we can control to turn it off or to turn it on, okay, as far as the monthly hitting. For your information, I taught this thing a couple of years ago, the same class. I told you how we improve. 2 years ago, we used to use the recurring receipt feature in QuickBooks Online.
So we'd pick up a client, we collect their credit card information, we would go in and we would put that information in. And it was a recurring invoice. It was fixed fee still, but we'd send them an invoice. And as you know, we would use the QuickBooks merchant account so that they had the option to pay with a credit card. And of course, we would encourage them to do so. So that was definitely an advantage over what I've shown you of what most accounting firms do. They send out a bill, hope and pray they get paid within the month or two or three, and that's pretty much the way most of them still do. So that recurring was an advancement over that because we would encourage many to pay by credit card when they received our receipt. But we've changed now to where they prepay us as a down payment, shows the seriousness, quite frankly, and if they have the money. Do the first 3 months free. At the end of the 3 months, they don't want to work with us. We give them their money back. We move on with our life. No problem. But we know we're so darn good at what we do, we know that 9.9 out of 10, unless we don't want them, will become a client of ours. And so then it begins. And so we've already got the first one, we've already paid for it, and then we set it back up to where the subscription occurs within, we use Stripe, okay, the e-commerce platform. And so that's how we're paid. So we set it back up, turn it off of idle, turn it back on to where now we're just automatically paid. So boom, on the first of the month, every single month, we're paid from that client. Now, what happens if all of a sudden it's a struggling small business and the payment fails? Well, of course, everything halts. We stop. And so we sit down and say, we communicate with the client as nicely and kindly as possible. We notice this failed, and wanted to know how you're going to rectify it, and we'll work with them, no big deal, that kind of thing. But nonetheless, we have total control, and that's what I'm trying to tell you. Nothing will be done until we're paid. And so, we'll hang on if they want us to hang on, that kind of a thing. Anyway, in today's presentation, I've tried to share with you that there's 3 types of sales. We have a golden rule, get paid as soon as you can. And the best way to get paid is by doing it through an e-commerce platform where you're prepaid, okay, for our products. And of course, we're prepaid for our services. So those are some suggestions that we'd give to you, okay? All right, now having said that then, that's session 6, increased cash flow. And so of course, the next time we meet, we'll be talking about customer service. We'll complete the series, how you retain clients, how you increase client revenue, and how you increase client referrals. Hope this has been helpful. Have a great day.